Najmul Majid Khan Siddiq, Lead Climate Justice and Natural Resource Rights, Oxfam, Bangladesh. Ms. Sabina Yasin, Research Fellow at Lead at Kriya University, is the presenter for our today's session. And the panel will be hosted by Mr. Fabrizio Valenti, Head Financial Inclusion, Lead at Kriya University. We are grateful to the speakers for agreeing to our request to join this discussion, and I'm positive that we'll be able to take away some concrete, forward-looking recommendations for action. Welcome once again, and I now hand over the session to Mr. Fabrizio Valenti to initiate the conversation.
Thank you, Kirti. Thanks all the panelists and the attendants for being today. I wanted to extend my gratitude to Access, Assist, and Niti Ayog for organizing the IFI Summit and having us here today. I'm really genuinely impressed with the quality of the sessions that you have put together despite the unprecedented challenges, as well as the platform that you're using. It's really, I could not imagine a better setup given the current situation. Today, we are going to talk about meso-level insurance in the agricultural sector. I'm sure that everyone in the session is aware of the importance of insurance in the agricultural sector. There is one of such importance for the Indian economy. I think that throughout the day, this is a topic that has emerged and has been discussed in different ways. And today, though, in this session, we are going to focus and zero in on this innovative product that is the one of meso-level insurance. Normally, we talk about micro-insurance when we talk about agricultural insurance, and instead we are going to go up a level and see what is the potential, the challenges, the unaddressed issues, and really what we could, how could we take advantage of this new or underutilized rather product that is agricultural insurance. So without further ado, because obviously we don't want to blame the moderator for being late in the session, I will leave the floor to Dr. Sabina Yasmin, that is a colleague and a brilliant researcher that is going to present some of the findings from the work that she is spearheading with the support of CIIE from IIMA. And after Sabina's presentation, we'll have a 20 minutes for a panel discussion with Mangesh and Enamul, and then we'll leave the rest of the session to 15 to 20 minutes for a Q&A. So Sabina, thank you so much, and over to you. Sabina, I'm sorry, could you please unmute yourself?
Yeah, thank you, Fabrizio, and thank you all for attending today's session, where we got a chance to actually showcase our study on scoping meso-level insurance in agriculture, funded by CIIE at IIMA as an initiative of the Bharat Inclusion Research Fellowship. This study is being conducted by me and one of my colleagues, Vineet Kurian, who is also at LEAD and is there in this presentation as well. In the interest of time, I would just go ahead without further ado on, discussing about what meso-level insurance means. So like Fabrizio rightly mentioned in the beginning, over the years and primarily in India, agricultural insurance has largely been looked at from micro-insurance. And this is our attempt to see the overall, feasibility and potential of an alternate insurance channel, that is meso-level insurance. So what do we mean by meso-level insurance? Meso-level insurance actually focuses on ensuring the agricultural intermediaries, and a natural question arises, like, who are these intermediaries that we are talking about? So the agricultural intermediaries can be any institution along the agricultural value chain, which is exposed to agricultural risk. But as we move higher up to the agricultural value chain, it could also mean intermediaries who are exposed to certain kind of non-agricultural risks. What are those risks? We'll see in the future slides. And then some of these intermediaries we have highlighted are agricultural input suppliers, financial institutions, producer organizations, and agricultural traders. So naturally, in micro-level insurance, we know that the individual farmer is the policy holder. Who is the policy holder in meso-level insurance? So in meso-level insurance, the risk aggregator or the intermediary or the institution is the policy holder instead of an individual farmer. In certain cases, they are also the insured party and the direct client of the insurer. Naturally, why do we need meso level insurance when we already have a micro level insurance in place would be a natural question. But over the years we have seen that there is increase in indebtedness and crop failures, and in the form of a lot of, actually the whole agricultural sector besides the climatic risk is also exposed to non-climatic risk and hazards, right? And then there are, which leads to say crop failures and non-remunerative prices. These are some of the risks that we have cited here. And in certain adverse situations, we have seen that the farmers, instead of resorting to a formal risk mitigation measure, tend to adopt to informal risk management, which leads to reduced consumption and sale of productive capital, assets, livestock, And over the years, obviously, the government has played proactive role in providing insurance cover to the agricultural sector. However, the current insurance product are always evolving over the time. Right from, I think, in the year 1999, when we started with the NAIS, and then we rolled out the MNAIS. We also experimented with the WBCIS, so it's ever evolving. But in the entire process, we have seen more than 50% of the target population still remains outside the coverage of this government scheme. We can discuss a lot about why that happens, but maybe that's for another day. Well, briefly to tell you, the objectives of the study is to assess the scope and feasibility of a meso-level product in the agriculture insurance sector in India, analyzing the attitude and scope of government authorities, insurance companies towards supplying meso-level crop livestock insurance and other agriculture insurance policies and schemes, analyzing the attitude and demand of aggregators such as financial institutions, FPOs, NGOs towards meso-level policies in the agricultural sector. While the second and the third objective basically looks into analyzing the supply side and the demand side of providing meso-level insurance. The fourth objective also tries to understand the key design component that a meso-level insurance product should incorporate. And then we have, finally, we try to analyze which could be a good distribution channel or a good model for meso-level insurance. To roughly state the method here, we do extensive literature and policy document review to understand the global experience with meso-level insurance in agriculture. And I'm happy to say we have some of the actual implementers of meso-level insurance that we have interacted with. Inam is one of them, one of the panelists here. Oxfam had implemented meso-level insurance in Bangladesh. That's so nearer home to take an example from. There are other instances of global experiences of meso-level insurance, like in Latin America, Asia, as well as Africa. We basically do a very detailed, key informant interview with the stakeholders using a semi-structured interview questionnaire. And post an interview, we post actually a quantitative questionnaire where we try to quantify their responses for our analysis. We also we have done a stakeholders mapping, which I'll present in the next slide, where we try to map the stakeholders in the interest and influence matrix, and then the ultimate. And ultimately, we would like to come up with a use case. So we are working towards the use case development at this point of our research. If you see the stakeholders mapping, we have categorized the stakeholders into primary stakeholders and secondary stakeholders. The primary stakeholders are the farmer producer organizations, agro-processing firms, NGOs, MFIs, and agribusinesses. These are basically um, the implementers of Meso level insurance, or we can say the direct customers of Meso level insurance. The secondary stakeholders are the supporting backbone and providers of Meso level insurance, like the government institutions, the regulatory authorities, insurance providers, reinsurance, insurance modelers, technical assistant providers, etc. And this is the interest influence matrix. Well, let me point out that this is very dynamic at this point, because as we keep on interviewing more stakeholders, we'll be able to map more, as well as like even the squares might just move up and down based on their responses when we quantify them. So as you see, agri insurance experts have huge interest, but the influence might be less compared to FPOs, who also are interested in and also have an influence over the uptake of the product. To give you more insight into this, we have interviewed FPOs from Tamil Nadu and Andhra Pradesh, and they have a very positive response. And then here are a few emerging insights, some insights from agri-insurance experts. Some of these experts who were there in the morning session, we had interviewed them for the study as well, and some we will reach out to very soon. The emerging insights from the agri-insurance experts is that definitely there is a lack of understanding on how an insurance business model works, which is true for most of the agri-insurance products. Then there is, they also cited out that aggregating risk is conceptually appealing, but the success of this approach rests on the choice of the aggregators. So the benefits of a meso level product for an aggregator is identified as being able to create a new product that accounts for locally relevant and specific risk. And meso level insurance can definitely potentially reduce the cost of administrating insurance products, because here you don't have to reach out to a large group of farmers. You just have to reach out to institutions which are really smaller in number than the number of individuals. And obviously meso level innovations can be tested through a regulatory sandbox approach. That's really an interesting input that they provided, and I think IRDA is also working in that direction. And then government can play a significant role in supporting the program, obviously with scaling up of meso level insurance would be amplified if the government plays a proactive role in supporting the meso level insurance product, like it has been for the micro level insurance as well. Emerging insights from private insurers, obviously we are very glad to know that they are very positive about meso level insurance. Providing insurance products to the agricultural sector, they say, is a viable proposition, and obviously an opportunity that they could harness. Some key aspects to be, they said, like with a profit margin, to start with a profit margin of 5 to 10% is always good to start with, and that's a positive point for them. Some key aspects to be taken care of are definitely proper pricing of the product, keeping in mind the kind of population and the marginalized section of the society that we are looking into. Pricing the product has to be kept in mind predominantly. And of course, in terms of improved loss assessment of the insured risk, streamlining the claim settlement process. I think fintechs will also play a role here in terms of making the process smooth. And obviously, they have talked about covering smaller areas in geographies for better implementation. And as reiterating what the Agri expert said, initial government support to launch the product would be good. The emerging insights from product design and advisory, Meso level insurance will work well to promote innovative production practices or use of inputs in agricultural value chain. They could be tied to say in case of FPOs, I think they could be tied to other services that the FPO provides or promotes, say uptake of a particular agricultural practice that they want the farmers to adapt to, for an example. And of course, FPOs and self-help group federations can be an important channel for distributing meso level insurance. And I would like to reiterate these points because this is something that we also saw was an insight from our literature review about the products that have been implemented in the past in other countries. So the overall experience highlights that the meso level distribution of insurance relies extensively on networks with pre-existing connections to rural household that the local aggregators have already access to. And in this case, FPOs and SGs are one of such identified channels. Of course, financial institutions can be an important delivery mechanism, but to determine the design principles, having a consultative process with the farmers is crucial to understand what the localized or specific risk may be and what is the specific risk that they want the protection against. So a potential use case that we are developing is for the case of FPOs. Of course, we know there are over 7,000 FPOs already in the country, and with the recent announcements, the government is promoting, formation of 10,000 new FPOs, and therefore there is a potential market waiting out there, and which will need maybe meso level insurance to cover some of the risk that they face to a point when we reach that they can cover most of the risk. And what can be done in this process? So I think, like as I said, the beginning point would be to have consultative engagements with the FPOs to understand what their localized and specific risks are that do not have any coverage so far, and what their needs are in terms of coverage that they want from insurance, and then trying to develop the products accordingly. And a beauty of meso level insurance would be that I think an FPO for a particular region could have a personalized or customized insurance product that they would want. And of course, the benefits will definitely percolate to the last beneficiary, that is the farmers, so leveraging the FPO can also, overcome issues of low awareness, knowledge, and trust of agricultural insurance among farmer groups. I think it's been quite a number of years that I have given into understanding the micro insurance program, specifically the PMFBY right now, and whatever insurance product existed before that. And these were some of the obstacles that always came in adopting the insurance product. In fact, I can tell you something from my own field experience when I was collecting data from a group of farmers in the year 2015, and I was so startled because around 90% of the farmers didn't know the concept of crop insurance then. We've come a little far from that, because I think now insurance companies also put in extra effort to disseminate and raise awareness about insurance, but there is still more to be reached, and obviously FPOs can overcome distribution challenges, especially among the non-loany farmers, because this is one group that largely, because if you know the micro insurance program, it was always and is linked with the KCC, and the people who take agricultural loan by default get covered under the insurance product. So the non-loanees actually stayed out of the scheme for too long, for too long. So I think Meso Insurance will overcome all of these issues of micro level insurance. And to know more about the meso level insurance and insights from our study, you can read our blog series, which is published in the Bharat Inclusion Initiative platform, the Medium, and also shared in most of our social media handles of LEAD. So please feel free to visit these blogs and get more insights into the study and about meso level insurance. Thank you.
Thank you, Sabina. Thank you for the brilliant and clear presentation. It really sounds like this product has a lot of potential to bring the benefits of risk protection and risk mitigation to a wider audience, to a wider public. Obviously, though, there are some challenges from different they come from different sources: regulatory, informational, practical implementation, profitability, and so on and so forth, scalability. And we are going to discuss some of these benefits and challenges with our panelists. I wanted to also thank the attendants that are starting to send questions in the Q&A. Please keep them coming. We'll go into them later. Feel free to ask questions more generally for the whole panel or specific to any of the panelists. Mangesh, Emmanuel, thanks for being here, and thanks again for joining us. So. Following Sabina's presentation, I wanted to begin the discussion with a very broad question for both of you, sort of to break the ice. So we are talking about meso level insurance, and as we know, it is a product that has not been taken advantage of to its fullest potential yet. How do you see the role of meso level insurance vis-a-vis micro insurance in the agricultural sector? Specifically, do you think that they are complementary? So do you expect that the farmer will be covered by both, like some level of micro level insurance and some kind of meso level insurance, or are they substitute? So it's either one or the other, and why? So Mangesh, maybe we can begin with you, and thank you.
Sure. Thanks. I hope you can hear me. Okay, cool.
Yes.
Cool. Thanks for the invitation and opportunity to speak here. Would also like to congratulate Vineet and Sabina for the excellent research that has been presented, and also the idea to have a sort of dedicated session on this very important and often I would say neglected topic of meso level insurance. Before I respond to your question, a quick word about Swiss Re, what we do. So we are leading reinsurer in the world, and very simply put, what we do is we insure the insurance company through highly specialized products and the financial capital. But apart from the financial capacity, we also help our clients to design new processes and design new products. And there comes the topic of meso level insurance, and happy to say that we have had some first-hand experiences of implementing meso level insurance products in India as well as outside India. Coming back to your question about the role of meso level insurance and how does it play along with micro. I think in a country like India, where financial resilience is often very weak, it would be highly recommended to have a bit of a collaborative approach between the micro level, meso level, and even macro level insurance products, which can work together. So it sort of takes care of your question whether these can substitute each other. I don't think so. These are rather complementary to each other. I think hypothetically, even if we achieve a good penetration of micro insurance in the country, we can't really say that we have closed the protection gap in the farm sector. As one or the other a disaster can strike one day, and it will definitely affect financial capital of the farming community. Unfortunately, at this moment, I think most of our discussions revolve around the micro level products, and there are a couple of schemes, PMFBY as well as RWBCS, about which I think Sabina also mentioned. I think we definitely need more focus, which goes beyond these two schemes. So instead of, let's say, talking about a scheme for micro sector, can we talk about a separate scheme for meso level sort of products, and whether we have a detailed policy framework to run these sort of products. And I'm happy that Niti Aayog is co-hosting this session, and I'm hoping that they also take a note of this so that we can have a better plan to roll out meso level insurance products in a more structured manner. So I would say, whatever we have on the micro level products, they have been running for a long time and they are working in their own way, but we cannot expect really everything from them. And we need to have some protection gap covered by these meso level insurance products as well. Yeah, thanks.
Thanks, Mangesh. Anamol, same question for you. Maybe you'd like to, since Mangesh covered quite a bit of the answer already. If you want to also talk about your own experience with micro insurance and talk about what some of the risks that could be covered by meso level insurance could be, that'd be great. Thank you.
So I do agree with some of the points that Dr. Mangesh made, like for instance, two being collaborative. So not necessarily complementary only. There are overlaps where they can function together or they can function separately also. Depends on the context. But I would also put a note of caution here, because we have to look at the context. If you look at what Sabina was talking about, the understanding of the concept of insurance or risk transfer. When it comes to micro insurance, it's an individual or a family who's making the decision. When we are talking about meso level, it's an institution who's making the decision, an aggregator. And decision-making process in an institution is far more complex than an individual or a household, which comes into play when we talk about meso level insurances. And in the context, I think we should also take into account two other things. One is the capacity to cover the risk. So to pay for the initial, I would say, sum that is required, the premium and all. There, I think the risk aggregator definitely comes in with more capacity to cover it rather than an individual. But it also depends on the context. The same risk aggregator, the type of institution in one context could be really poor, may not have the financial means, whereas in another context, the same aggregator type can actually do that. So that also is there. And last but not the least, the accountability mechanisms and the power dynamics in the context where we are talking about. Because risk aggregator itself holds certain power, which is more than the individual and the household, the farmer. And if the risk aggregator abuses that power, and if the farmer does not have the means to hold them to account, then meso level can really be messy.
Thank you, Anamol. Very, very insightful, and thank you for that, because you're paving the way for my next question. That is also again for both Mangesh and Anamol. And Anamol, maybe you'd like to start this time. So Sabina highlighted two potential types of risk aggregators. She talked about FPOs. She talked about SAG federations. Can you think of other types of risk aggregators or institutions that could play a role as meso level insurance policy holders, and why do you think that they are best suited to do so with the objective of making sure that the benefits are translated to the beneficiaries?
Of course. So I would confess that my experience in Indian context is quite limited. I can talk about my experience from Bangladesh. So so here we have farmers clubs, so integrated pest management clubs and integrated crop management clubs, and they are not completely run by the government, because these are clubs which are organized by the Department of Agricultural Extension. So they have a semi-formal relationship with the local government institutes, but they are independent and they can take their own decisions, financials and all. So these are types of institutions which are close to the farmers. So the power relationships and accountability mechanisms that I was talking about, they are close to the farmers and they can be held to account. And because of their nature of savings and all that, they do have certain capacity to act as meso level aggregators. That's there. But of course, the local government institutions, the union parishads in Bangladesh, maybe the panchayats in India, and the certain types of institutions of that sort, they also do have capacity. Or the disaster management committees or groups in Bangladesh who has certain financial budget allocation behind them also. They could also play a role there. It depends on whom we are talking about. But it will certainly have a prerequisite of organizational capacity. So if the institution we are talking about has a good capacity to maintain itself, it's not just financial, it's also to run the organization. Because if we are talking about insurances, the risk will not be every year. There will be like maybe in 5 years or 6 years, there will be a certain thing. So the effort needs to be continuous for a long time. Every year we have to keep paying and all that. That mechanism needs to be there if these organizations come into play. And other than that, the microfinance finance institutions are there. Like we were talking about loans that are coming from the banks. But in Bangladeshi context, microfinance institutions are the closest ones for the farmers actually. And there also, we have been also trying that. That also works. There are problems, of course, around that. Regulations are not yet ready, perhaps, for the meso level products, and there are interventions that are required. But I would say institutions who use less power over the farmers, but extend more support and give them more access and control over the decision-making process, I think those will be the best to start with if we are really going for an inclusive product in the meso level.
Thanks, Enamul. Mangesh, over to you.
I think I fully agree. The fantastic point raised by Mr. Enamul that the responsibility is something is a two-edged sort of sword, and that way, if a particular entity is given, let's say, a claim payout in a bad weather year, what happens next is quite critical. So I think dealing with institutions with good records who have farmers' benefits in their minds is very important. And here comes the challenge of having someone like a good influence on the farmers, which Sabina mentioned in her presentation. Vis-a-vis someone who has good intent, and you may not find always an intersection in these two sets. So that remains, I would say, a big question currently. Yeah.
Thank you, Mangesh. Just to tee off from your answer, a topic that is emerging from the discussion is the concern that there could be from about translating benefits from meso-level insurance to smallholder farmers. And a possible solution is obviously about targeting the right institution to receive meso-level insurance. But are there any insights that you could share with us around maybe more formal mechanisms to ensure that these benefits are translated to smallholder funders? I'm thinking about contractual design, payout terms, and so on and so forth. So Mangesh, feel free to jump in on that with your thoughts if you think that we are at a stage where that is something that has been already discussed and tested out, maybe with your experience in the Indian context, or it's something that requires more work.
No, I think a lot of work is definitely needed. As I mentioned, I think the whole topic of meso level insurance hasn't yet got the attention that it deserves. We need to definitely think about the intent of the purchase here. When an aggregator purchases the insurance product, ultimately the aim here should be to make the institutions, the buying institution, more resilient in terms of financial capabilities, so that it can serve the farming community even better, or it can put more financial capacity in the sector. Before talking about passing on the benefits, we should also focus a bit on the costs of such cover. How are these costs passed on, or how are these costs sort of taken into account from individual farmers? If there is an aggregator talking with, let's say, 1,000 farmers, how does that money for purchasing the meso level insurance is brought in the system? Is it completely taken care of from let's say a funding or donor institution? I don't think that's a very sustainable model, but that's something which has played a role in promoting meso level insurance. But if we are talking about really a very sustainable or very commercial model, then how do you charge these costs to the individual farmers? And I think when you flip that, you ultimately can design a very, very good or very fair way of the system of passing on those benefits. So let's say in case of a bank or MFI, you can actually design something which is based on interest waivers or maybe an EMI waiver. Of course, this needs to be pre-written, but these are just options that I'm trying to figure out. We also did a project in Bangladesh actually, along with Oxfam, where we had actually listed down the households per village, and we tried to understand whether there was any flood affecting that particular village. And for that whole village, we tried to give a transparent payout table. So that could be another way where you design the product slightly at a level which is between the meso level and the micro level. I would say it's getting a bit complex, but at the village level where you group the farmers further. Then there was this product given by Basics a few years back, where they purchased a mini portfolio cover for their MFI portfolio. Again, very similar to what Oxfam did in Bangladesh, where Basics tried to sort of assign the payouts to a couple of weather stations, and all the farmers assigned to those 2 or 3 weather stations ultimately got certain benefits, or rather were promised to get certain benefits. Let's say Agri input company, I can give an example of Pioneer Seeds, where such sort of product has been implemented. Very old case, I would say about 12 years back, when Pioneer Seeds wanted to give a drought related coverage for its farmers automatically. So what they did, they basically took into consideration their marketing budget. They pulled money from that to sort of give the premium to the insurance company. But it was a classic meso level insurance product where the farmers were ultimately sort of promised a free packet of the seed in case a big sowing failure happens on a very big area. So I think there are different ways, I would say, to design this depending on the institution. But I fully agree that everything needs to be sort of transparently laid out, and I'm very sure there could be a lot of other options as well than what I have mentioned so far. Yeah. Over to you. Thanks.
Thank you, Mangesh. I'll let Enamul comment on that.
Very quickly, because we don't have much time. 2 things. One is, if we look at the collaborations where traceability is higher, like for instance, the fintechs, Sabinappa was also mentioning, and the e-commerce platforms where traceability and transparency is already there if we really want to make use of the system. If they come into the collaboration for meso level insurance, I think this trust issue at the end level delivery can be resolved to a large extent. And in addition to that, the local level dealers of seeds, fertilizers, and all those supports and marketeers, if arrangements within the contracts that they have can be made, which assures the future bailouts that the farmers can get, I think that can also be a way out to ensure that the payment actually is received by the end user.
Thank you, Enamul. That is very, very insightful. And yes, we have 30 minutes to go. We'll probably try to end with a few minutes earlier, just to make sure that we can complete all the formalities for the next session. So I'm just going to ask you and Mangesh a final question before opening to Q&A. Please, keep them coming. So far, we got some really good ones. So looking forward to get to that. Animal, we're talking about design principles here. And based on your experience in the micro level insurance, what do you think are some of the pitfalls of macro level insurance that could be instead addressed by shifting to meso level insurance?
Two things. One is, so far, from our experience, in the micro level insurance related with agricultural losses and damages, there is still a high expectation of subsidies. Firstly, because people are accustomed to reliefs and other agricultural subsidies. The second is the overall idea of paying for future loss and damages is not yet very popular. And that's largely also because of the sheer lack of capacity of the farmers. So that's one of the challenges, I think, which can be to some extent resolved by the meso level, because when the institution, I was telling about it earlier, the institutions comes with better decision-making capacity in terms of financial decisions. So they have their financial base and they can take certain risks which an individual farmer cannot, because at an individual level, they don't have that much of savings to make that decision. That's there. And the other challenge that we see at a micro level is accountability. So accountability in terms of data. So how does a farmer believe that this NGO professional or this researcher coming in and telling them that the flood is not up to the mark? They have seen a flood, but the researcher is saying, or the NGO is saying, that it was not at a level where you can actually get a payment. So those issues arise when you work at the micro level. But at a meso level, institution to institutions, you can actually resolve things at a very early stage. But at a farmer level, we cannot really go to millions of farmers and try to make each of them understand the complex processes which are used to make that decision of pay out or not to pay. So that's something I think meso level can deal better.
Thank you, Animal. That was really insightful and much appreciated. So now a question for you, Mangesh. So as a risk modeler, what type of risks do you think are best suited to be covered by a meso level insurance against, for example, risks that are better suited by micro or macro level insurance?
I think if we speak about sort of classic division of the risks or the coverage types, typical micro cover is usually designed to serve high severity, high frequency and low severity sort of disasters. Typical macro cover, which means the coverage which is even beyond meso, which is usually sold to the governments, those would be designed to take care of high severity and low frequency event. And I think there is no clear sort of border that we can draw, but I would say meso level insurance product lies somewhere between these two. So again, it's very difficult to sort of give a clear answer at what frequency your meso level insurance product starts. Lot will depend on the population that we want to cater to. If they are already served by certain typical micro level products like PMFBY or RWBCS, perhaps you can study that and you can design something which goes slightly beyond that to take care of the financial institutions or any other aggregators' financial issues. Yeah, but I think the underlying sort of principle is very important here. We are trying to sort of segregate, those risks which can be fairly absorbed at the farmers level, vis-a-vis those which can be really widespread and can actually break the backbone of the economy, backbone of these financial institutions or agri input providers. And the moment we sort of think about covering the second type of these risks, we are talking about meso level products. Yeah. Thanks.
Understood. Thank you, Mangesh. So it sounds like when we're talking about meso level insurance, we are really threading a fine balance between scalability and let's say personalization or tailoring. And this leads us to actually now we're moving into the audience question, and just a quick mention for the support team. Our chat seems to be disabled, so I don't know if I am getting more questions coming in, but we'll just do with what we have so far. There's plenty. So the first question that we are going to take from the audience is about scalability, and the question is around whether we think that there is the potential for meso level insurance to be scalable to the point of being profitable, or if like profitable to the point that is attractive for large companies, or if it will always remain a niche product because the level of tailoring that we said is necessary to make sure that it is appropriate to the context of the local institutions and the local realities is just too much, requires too much work, too much of investment to lead eventually to a profit. The question is for everyone. So Sabina, we haven't heard your voice for a while, so maybe I'll start with you if you don't mind.
Sure, Fabrizio, I can go ahead. So I, as I also rightly mentioned, the insights from the providers, you know, it's like, of course, they would be interested to provide meso level insurance, but profitability is something they have to consider while scaling the product up. And as you rightly mentioned about like the question of like scaling up the product to make it profitable for them as well to sustain, you know, and at the same time like the question of like customizing it. And also I would like to point out here when I talk about like whether you know, the beauty of meso level insurance is that it can be customized to a particular institute. It would also be extremely difficult to come up with, say, 10,000 products with 10,000 different designs. So I guess, like, you know, here's the challenge, you know, but definitely with larger geographies, we could have products with a little room to make it more suitable for a particular institute, you know. So I think I have to be cautious when I'm telling this, and also have to clarify this. And this question was a good question to actually make that clarify that point, you know. And I think like from the practical experience of Mangesh and Enamul, they can provide more insights into this, because you know, I am looking at it from the angle of a researcher, but they are the actual implementers and providers. So I think their perspective is very important here. And one thing, like I would like, like from a previous discussions, one thing that Mangesh mentioned about, you know, who could be the potential uptakers of meso level insurance, and he rightly pointed out so many cases. And adding to that, because from our interactions with a lot of these institutions, they have said that, you know, in instances where they are testing new varieties of seed with the farmers, in these kind of instances, I think meso level becomes very much applicable to the scenario. And at the same time, you know, here had also been Pioneer Seeds had tried it, but the product they offered was different. It was not really for testing out the kind of uptake that, say, WRMS was wanting, because they sort of also provide you know, seeds and other services to the farmers. And they said that uptake of a particular variety of seed, introduction of new varieties of seed, these can be scaled up with meso level insurance. And with regards to the pricing of the product, and the question of how the farmers are going to pay for it, even like Enamul pointed this out. So just an insight from the the interactions we had with FPOs, and we asked the same question, like you are saying that yes, this product is applicable to us, but would you be in a position to say pay the premiums year after year, and how would you manage that? And identifying the source of that premium. And they cited some places. They said, like, when we provide our yearly membership fee that the farmers have to pay to the FPOs, they could sort of distribute the premium payments to that particular fee, or in terms of any value-added services that they're providing. And in places where FPOs are also integrating and selling the produce to the market, the profitability that they get every season, they could reserve some amount for the insurance. So this is something also I wanted to share. And coming back to your question about scalability and profitability, I would leave the floor to Mangesh and Amul.
Thank you, Sabina. Mangesh, I'll pass the baton to you to address this question, and I'll add some another question on top of the existing question that is also coming from the audience. So what we are being asked is to make meso-level insurance products more affordable. One of the audience members is wondering whether reinsurance companies would be open to cover specific crop cycles, for example, unseasonal rainfall at harvest, with the intent of reduce the insured value and hence the premium. So I wonder whether you could comment on that and expand on the question around profitability that Sabina started to discuss.
Sorry, I'm not too sure about the question from the audience.
I think that the point is that whether reinsurance companies will be willing to take more risk in a sense. For example, if for specific crop cycles risks, what is mentioned here is unseasonal rainfall at a harvest that maybe were not covered initially by the insurance, and the answer could be either way, yes or no, obviously. And if you would be willing to comment on that, it'd be great.
So I'll just I'll try to answer the second question first. So I think unseasonal rainfall is a very common challenge for the farming communities in India, particularly in the Rabi season. And this is already covered, I would say, to a large extent by the current micro level products like PMABY and RWBCS. But if the question is really to cater to those farmers who are not insuring enough or who are not insuring at all through these sort of schemes, I'm very sure that reinsurers, or rather insurers, will be very much interested in identifying such opportunities and dealing with such institutions to provide them an adequate meso level product. So I think this sort of issue of covering unseasonal rainfall, I would say a very classic weather index type of deal. Not very difficult to design per se, and I'm very sure that insurers as well as reinsurance community would be interested in dealing with such sort of coverages. Coming back to your earlier question that you had asked to Sabina and us, more like a chicken and egg problem, when we talk about the scalability for meso level insurance, I would say what makes a meso level insurance more attractive is that there is a bit of an inherent diversification that is provided by an aggregator. An aggregator might be, let's say, we talk about Andhra Pradesh, where there are a lot of seed companies present, and if we are talking about, let's say, coastal Andhra Pradesh, the risk profile is very different, more prone to cyclones, I would say, vis-a-vis the interior Andhra Pradesh, which could be more prone to droughts. And if I cater to a company which is spread across Andhra Pradesh and is dealing with let's say seed farmers, in that case I can design a product which sort of cancels out some of these risks, not all, but some of these risks, and makes the product more affordable at that meso level, because affordability is, I would say, one of the biggest constraints for any meso level buyer, and most of these institutions work on very thin margins. That's the overall conclusion that we have got after dealing with these meso level products for a very long time. So how do we make sure that the affordability constraints are met with our meso level offering? And of course, going beyond this, can, let's say, government bodies, the way in which they are subsidizing PMFBY and RWBCS products, can there be a fund allocated by Ministry of Agriculture dedicated for, let's say, prescribed sort of meso level insurance products? I think that needs to be looked into. So I would say scalability will be there provided these other points are taken care of, and affordability is a challenge to make the things more scalable, I would say. Thanks.
Thank you, Mangesh. And Amol, any comments from your end, considering your the experience of Oxfam in the sector?
Very small addition, actually. Many things were covered. I think competition in the market is one of the factors, because if business as usual way of work can go on without having an insurance, why would an aggregator pay more? So the cost of not having the meso level product has to be more than the premium or whatever they are investing here. And when there is competition, I would bring the factor what Sabinapa was saying. One of the companies she was saying was using the marketing budget to use for the meso level product. So your product being insured is a marketing strategy also, which means there is competition there. Like another aggregator who's not providing insurance, against that, when you are providing an insured product, that gives you a leverage in the market. So those factors will apply for any aggregator, what value addition this is giving, and that will to many extent determine whether the product is scalable or not. And there are areas where we need to work in the market systems which are beyond just the insurance company, the product, or the reinsurer. In the market system, the role of enablers, maybe like us or others, that is there before the market is prepared to really take this to scale.
Thank you, Enamul. And building on your answer, and we started talking about the role of aggregators, but also Mangesh and Sabina started talking about the role of the government and policymakers. Mangesh brought upon some suggestions on how the government can further support the adoption of meso level insurance, but is there anything that you could add, maybe from the Bangladesh experience, what the policy context in Bangladesh looks like? And apart from these supporting initiatives, like could be like a guarantee from the government or a pot of money that comes from that is dedicated to this, is there any policy change that is required? And this is mostly for Mangesh and Sabina, because it's more about the Indian context that is required to make sure that meso level insurance can be scaled up, apart from besides these smaller scale experiments or pilots. So Enamul, maybe you want to begin with like a quick comment on the Bangladeshi context, if on the policy context, and then we'll pass the baton to the others.
So it as I was saying, there are like the way the insurance sector is set up, our policies. It's basically individual focus, individual procurer focused, and when it comes to meso level, especially when it comes to accountability mechanisms, whether the risk aggregator is actually going to the last extent and covering the risk of the person they are doing it for, there is no mechanism to monitor that, which is a risk, which is where, at least if we want to build trust, because at the end of the day, the customers are going to cover the cost. Aggregator will aggregate it, but they will retrieve the cost from the end users. So unless there is a trust at the end level customers, there won't be a solution. So for building that trust, policy changes will be required there. The second thing that we see here as a challenge is gross mistrust of insurance as a product. It's not just for disasters, any insurance. And one of the reasons is what we call here in Bangladesh third-party insurances. So when the government actually forces you to have an insurance, it came from the transportation sector. So the policy asks you to have an insurance. So just to avoid punitive measures, you are having an insurance. So that actually doesn't give you a coverage, but that paper serves as a tick mark for the government, which was disastrous. Now the government is coming out of it. Recently there was changes. I think that is also applicable when it comes to macro level insurances and the link with the Meso. So government is talking about covering mega disasters through the disaster management system and bringing insurance as a solution. How that plays out, I think, will also determine the fate of Meso level here, because as I was saying, in the micro level, we are facing that problem about the mentality to have a fully subsidized product. If then macro level comes in and you see another subsidized product at a gross level, then at a Meso level, if you are asking people to pay for that product, that will be a problem at a I would say not just policy, I think also at a practice level, at a decision making level. I think we will see through what happens, but there are areas where changes are needed. And the other thing is about e-commerce platforms and fintechs, as I was saying, because of the traceability and their trustworthiness to the people. I think there is potential for them to become a strong collaborator here, or even an aggregator themselves. But for them, the policy regulations are not yet ready. How they will operate here, and if it's not regulated, there are risks of misappropriation.
Thank you, Enamul. We are in the final stretch of the session. So Mangesh, Sabina, if you have like a very quick comment on this topic of policy change. And speaking of policy, we all know that India introduced new farm laws. I don't need to tell you about that. We all are very, very aware of that. But that brings to greater relevance the contract farming as a way of doing business. And somebody from the audience is asking whether you think that Meso level insurance can play a role in such arrangements, given the profile of contractors that could enter this space as contract farmers, contract farm providers. Sorry, Mangesh, do you want to take it on? I'm sorry, we need to be very concise. I know we could spend half an hour, but we don't have it.
Sure, I think no. I think contract farming agencies could be very well suited customers for Meso level insurance. But going back to your first question about the policy changes, I would say slightly broader topic, whether IRDA can look into dealing with mutual insurance companies a bit in a structured way, which can then purchase a Meso level insurance for their needs. So it could still be more like a Meso level product structure there. And of course the tax related regulations, because if you see currently, if a Meso level insurance product needs to be bought, you need to pay GST on that. Good service tax, and I think that's something which can be waived off, given that PMABY and RWBCS products don't have GST. So these two thoughts I would just leave with you. Yeah, thanks.
Sabina, one final word, very quick. I'm sorry to pressure you.
I will, no, that's completely fine. But I will just narrate one incident that I had recently, which I instantly thought could be replicated in my study. When I went to purchase a new car this time with my father, and this is the thing, you cannot take the car out of the showroom unless you have a vehicle insurance in place, right? So we can sort of have that. You cannot utilize this fund to set up an FPO unless you have your risk covered, or your risk profile is well sort of taken care of. So I guess this will be my brief answer to answering your first question that you asked, Fabrizio. Yes, thank you.
Thank you, Sabina. I think that's brilliant, and I think that connects to the final takeaway that I have from the session. That is, we need to try more approaches. There is a lot of work to do in Meso level insurance. The discussion that we had today, I think, was very inspiring to really point out to the potential that this instrument has. But there is more to do in terms of testing different approaches and see what works at scale and what brings the most benefits to the smallholder farmers that are our final beneficiaries. So please do get in touch with myself or the other panelists if you want to discuss and talk more about Meso level insurance in the conference or via email at any time. We are passionate about this and we are happy to talk about it at any time. And with this, I'll want to thank the panelists for the great session. I want to thank Sabina, the speaker, for the presentation and for her contribution. I want to thank, obviously, all the audience for the very insightful questions. And last but not least, I want to thank Kirti and the rest of the Access team, especially the support team, for helping us have a very successful and very smooth online session. So Kirti, thank you so much, and over to you.
Thank you, Fabrizio. On behalf of